Hey, good morning, guys. So this one's going to answer hopefully two questions. I know I put a bit of time yesterday into answering the institutionalized one or not, but I think the reason I wanted to put this video together for the subscribers is this could technically answer the two questions. Okay, so first things first. If you look at an Elliott wave, right, the main the main part, the main logic. Let me see if I can change this in a second with the lines, right? Let's have a look. Let's just see, we go white. There we go. So, in essence, right, what you, I guess, want to see, what you want to look at is when you have some kind of an accumulation move, right, you want a kind of an impulsive move away. Now, that impulsive move away is, part of this bigger move, right? However, when I talk about things like nested, right, the nested move would look something like this, right? So you're going to want to see something inside that move, right, that does this. If I change this to say orange. So the general idea, right, is when you see these bigger moves, inside you want to be able to visibly see, right? If you drop down a time frame, for example, right, or even two time frames, because Elliot is more of the cycles rather than the time frame, right? It's only me personally, and I know Paul's done this as well. It's only me. I'm not looking to use Elliot to guess every little swing, right? I'm not using Elliot to kind of predict where we go, right? What I'm using Elliot for is ultimately a bias, right? So when I first started learning Elliot, I first started using Elliot, all the kind of intermediate cycles and it can get kind of complicated with terminology, right? Now I'm lazy. I like to kind of break things down into kind of simple terms, into to very easy to understand logic. It's easy to explain, right? So for me, the way I look at it is, if I'm looking at a cycle like this, I'm just going to call this the monthly, right? If I'm looking at these kind of moves inside here, I'm just going to call this the weekly, right? If I'm looking at these moves here, I'm going to call these my daily, right? And it's just the way that I look at everything is in short, medium, long, right? And this is just something, it's almost a traffic light system, right? So the general idea is that if you see these larger cycles, right, and we're going to say, oh, well, this creates technically a much larger one. Inside this move, we've created obviously the smaller one, but this had the nested move inside, right? So this here to here would actually be the nested move inside this colossal one, right? And it's kind of as simple as that, right? So the general idea is, when I'm looking for these types of moves, right, what you got to understand is I don't care too much about this move, right? I almost want to watch this move rather than trade this move, right? Because what this is going to do, this is going to give you the indication, right, that we've had our change of character. So let me just hide this a second. Right? Hide. There we go. So the general idea, right, is the price has come down regardless of the shape. We've created this kind of, bottom action, right? Now, there's going to be telltale signs of accumulation. Right? This is where the Wyckoff and the Elliott kind of combine, they mix, they kind of merge, right? The general idea is that when we have this accumulation, this is creating your master pattern, your Wyckoff, right, etc., etc. What you tend to see is when this move rallies, right, it starts to create new highs, right? So you actually got something like this, a higher high, right, in theory, right? Not always, and this is the difference between it being ugly or textbook, okay? When we create this higher high, right, all of a sudden we kind of run out of steam, right? So what you'll end up seeing is, as it starts to move, just change the color of this a second, as it starts to, to move on up, right? You start to see the stochastic get into that kind of overbought area, right? You might get a false bar, and then we kind of grind up a little bit. And then we drop hard, right? That drop hard is basically the two coming back into the liquidity pocket, right? There's your liquidity pocket, right? So in essence, that two is going to come back in, and this is why I say, it doesn't happen all the time. It's not going to be, every single one. You're not going to get this textbook kind of move on every single swing, right? So the general idea is, as this two comes back down, it changes back to white. As this two comes back down, right? The general idea is then that this is giving us the kind of the fuel, the ammo for a really big impulsive move, right? And this is the reason that the 3 can't be the shortest based on an Elliott move, right? Because logically speaking, the rules that they have, right, and this is why trading Elliott impulsively compared to the corrective moves, it's just going to make your life so much easier, right? And this brings me on into the second question. The point of trading, shit, it's kind of defeating the whole point of becoming professional, right? It's kind of like saying, oh well, I'm going to go and play roulette and hope I win, rather than playing poker when I know I'm going to win. Okay, and that's kind of my point. That's the emphasis. So what you want to see this kind of move away from an accumulation, right? You start to see things like volume increasing and so on. So you can then measure this. Now, inside that move, right, sometimes you'll get it very ugly, like that Bitcoin move that went up, right? But what it does is it comes back to your liquidity pocket, right? Now, at this particular point, on a smaller scale, and I'm talking, say, the weekly compared to the monthly, right? And this is where you you're going to look at the kind of intraday type entries rather than the weeks and the months and the years into the future. So the general idea is that if you really wanted to take that, right, this is where you've actually had your move and your pullback. This is a cracking entry, but it still comes with a little bit of risk, right, in comparison to trading something like this. Now, the general idea, right, is that when you can see a move like this orange nested move, there's nothing stopping you taking this, right, and saying, well, we'll take the 4 to 5 smaller time frame. Personally, I don't like that, right, because what I've seen at this particular stage is not enough to reinforce the evidence, right, and support my decision, my bias, my direction, right. I haven't seen this yet because this orange was still forming, right. When we get a decent 1, 2, 3 pullback or ABC pullback, right, and the 1, 2, 3 pullback for me is kind of back into that liquidity range, it kind of confirms that, yeah, I was right in this. We've had the higher high, we've kind of seen this nested move, we've come back into liquidity, right? Now, a lot of people are going to say, well, why didn't you take this one? You can, right? There's nothing stopping you taking this one. But for me personally, I just don't like it, right? And I don't like it because I don't need it. I don't need the hassle. I don't need the stress. The general idea is to follow this move along, right? Now, what then tends to happen is you're going to end up with another move, something like this, inside here, right? Now, at this particular point, I've got one confirmation. I've created a new higher high, right? In this move, right? We've potentially hit the fib extension. So if this is my 0, right? I've come up 1 and I've come back 2. I would anticipate this to be somewhere around that 1618, right? Now, at this particular point, I've kind of said, hey, this worked out for me. This worked out for me. This worked out for me. How much confidence do you think I have in the next move, right? That next move, the confidence there now means I can start looking for pullbacks, knowing that I've actually created a 0, 1, 2, right? I've then created that 3. So what I want to see up here is on a smaller time frame, or 2 smaller time frames, 3 smaller time frames. I want to see the distribution action, right, play out in a Wyckoff schematic that gives me clues as to how far this is going to go. Right? This is where your point and figure comes in, and so on and so on. Okay. Now, the general idea, right, is if let me get rid of some of this mess. Let me get rid of this. If I just take all the brush strokes off a second. And then just leave the pattern. Let's get rid of this. Let's get rid of this. Lots of brush strokes. Something like that. So let's leave that one back on. I not the wrong one. Let's leave that on there. I'll get rid of the brush as well. Right. So the general idea at this particular point, right, is we've now created, the 0. We're on the way to a larger scale one. Right. I'll put this in brackets as well. We're on the way to a larger scale one. I've seen this play out, right? Regardless of what happens in here, I don't care, right? the chances are that's going to be a 618, that's going to be, 786, that's going to be an 86 type of bounce, right? And therefore you kind of add into your kind of correlation that this is doing what it should be doing, right? It's confirmation for me, right? Now, when you think logically what's happened, right, is the change of character has come at the bottom. We've gone away and we've created potentially a new high. We've come back and grabbed liquidity, fueling a massive rally, right? This rally has taken out the previous high. Now, what tends to happen with a fall, and this is why, from an Elliott perspective, if you go do some research online, you read some books, what tends to happen is 1 to 2 and 3 to 4 are almost the inverse of each other, right? So if this has happened fast, expect 4 to be drawn out. Right? Now, what tends to happen there is that if we've had literally a zigzag move, we've had a pullback where we've gone maybe A, pullback B, we've only gone 618 or 382 even, and then we've literally come down, we've maybe hit the 1 or the 127 extension, for example. You can expect this to be almost lazy, right? Now, the reason that this is lazy is that you've technically got reaccumulation happening here, right, rather than there. Right? So in essence, what you tend to see is this reaccumulation takes time, right? And the longer the time frame that goes on, the more fuel in the tank to rally, right? The big players, Composite Man, these guys need to hide their positions. They can't hide their positions over a 2-day turnaround. Right? You're talking about billions of dollars, especially something like Bitcoin or something like oil or gold, right? You're talking billions of dollars, right? You can't accumulate in 2 days $1 billion without spoofing the market in the wrong direction, right? The market will run away from you, Composite Man. The market will just go, right? So in essence, you need that time, right? You need the full retail, which is why 3 to 4 is often kind of dragged out, right? But what tends to happen is one of two things. If, for example, right, you tend to have, let's get rid of some of these again. I'm just trying to keep this chart clean so it makes more sense as in what we're looking for. So what tends to happen, right, is when this move here is relatively ugly, right, it kind of means potentially Composite Man didn't have enough play, right, didn't have enough time before the price run away from him, right? This could have been retail jumping in. This could have been other institutional players jumping in, right? Now, the one thing that happens with something like this is that when that rally comes, right, you'll be able to spot this level, 1.618, right? You can technically work out the 2.618. Sometimes it'll rally to the 3, maybe even the 4. If you've got a nice strong move here, and this looks textbook, this comes back textbook, this comes textbook, what you'd expect to see is this and this being textbook, right? When this move is ugly, Composite Man is almost desperate to drag that price back down into this liquidity zone. Because all we've done down here, right, is we've technically created a larger master pattern, right? So in essence, what we've actually gone and seen is price movement with a magnetic pull back to the level that we've left, right? Now, at this particular stage, you can actually include not just we've had a little move in here. We can probably break down the nested moves to the downside, the nested moves to the upside, the pullback, probably coupled with a couple of the moves inside this. Right? This becomes the auction area for your bear market, for your pullback, and so on, so on, right? So just break it down logically, step by step by step, right? Why do we rally from here? Well, we've had enough selling. We've actually gone, but we didn't have a chance to accumulate enough to really go, right? We couldn't have broken through here because we weren't in this period long enough, right? We then come back, we grab that liquidity, and then we can really move. We come back and test the top side of that 9 times out of 10, and we rally through. We create that one, right? Now, ultimately, at this particular point, we've got a longer period, the reaccumulation, right? before we go on up. Then we have the distribution before that fuels the drop down. Right, so it's kind of common sense when you break it down like this, yeah? It's nothing difficult, it's nothing complex, right? The couple of issues for me, and this is where the two questions, like I said, kind of merge and collided, right? Is that when you break this down, step by step, it's easy to say if my bias is to the upside or my bias is to the downside, right? I know roughly the direction that I'm going, right? I've had loads of people over the years say things like, oh, well, we can use Elliott and we can trade this on a 1 hour time frame. Yeah, great, crack on. The issue with the 1 hour time frame or 4 hour time frame, right, is that these moves are relatively easy to be manipulated, right? So what tends to happen is if you trade this, yeah, great, you can get a good understanding. Like I said, this could be a weekly and I could be looking at this as a monthly, right? So the reality is, of course, it's possible, right? The trouble being is if you don't have much of a picture, you're still guessing as to whether or not this comes down. You're still guessing as to whether or not this goes up, right? So the beauty of waiting on the optimal trade is the 4 to 5 move because you've eliminated all the risk, right? If you can catch the two, especially on a bigger time frame, a monthly, and this is exactly what I'm looking at in terms of Aussie dollar, right? I'm looking at this point of view, bigger time frame, and I'm talking a much bigger time frame. When I get into Aussie dollar, right, it'll be one trade I'll need for the next 3 years, right? It'll be scaled in, scaled in, scaled in, and that's good enough for me, right? Take all the risk out of the equation, everything lines up, and at that particular point, within a couple of hours, you're in the right direction. Within 2 or 3 days, you've moved your stop loss, you physically can't lose money, and at that point, you just keep adding to your profits, right? So this is why, right, in terms of trading this kind of professionally compared to gambling or guessing, right, is what you're actually looking for is you're looking for a couple of plays, right, that give you the bias, kind of confirm your direction, confirm, the overall angle, right? So if I come back and I put this back on, if I come back to finish the first question off before kind of stepping into the second one, right? When we had this initial move, right, this initial rally, and I called the rocket call, and it was, here we could see up to the UTAD and down. We come down, but we come back and we retested the area, the zone, right? We then drop down, but look at where we dropped down to, back to where the reaccumulation occurred on the way up. Right? That's where the liquidity sits. So we now had this move sitting here, right? We've now got this move sitting like that. Let me get rid of some of these again, just to make it clear and easier to see. Here we go. So we've now sat in this zone, right? We then rally 1, 2, right? Which isn't enough to give us any kind of momentum. We then see a 3, right? Technically to the underside of that zone, right? We then have its reaccumulation. This is the 4. And now at this particular point, right, we can do the fib extension. We got a perfect retracement. We know that the rally is already going to be capped. And I call the cap of the rally here in August, right? We're going to come just above this all-time high, grab its liquidity and drop. Where do we drop to? Well, the value area, right? Look at the volume sitting inside of that zone, right? So it's kind of common sense then that price hasn't gone to 100K. Where does it want to come back to? Well, to the value area, yeah? Now, obviously, at this particular point, a lot of people that were buying at 50, 60, how many people have said to me, oh, I listened to Plan B and I bought at 68? There's always going to be a new round of suckers, right? So the reality is this particular value area, right, is now creating its position, right? So the center, and I've only done this rough, right? This is just going to me trying to explain and show the example, right? What you're going to get now is you're going to get a cluster zone in the middle of probably this rather than all of that, right? But you're going to get that as another form of resistance on the way through, right? How bullish does this move look compared to this move over here? Right? Not at all. Zero, right? Zilch. The issue then for trading something like this, right, is that everybody has the desire. It's, oh, I want to get into Bitcoin. Oh, I want to go and make $1 trillion. This is going to the moon, or 135K by next month, right? The reality is, this is where picking your instruments, right, makes an awful lot more sense, right? When you look at something like this, you've really got to zoom out, right? If you zoom out and the chart looks like, what was it? Yeah, I think it was chain link was the other one in question, right? If you look at something like this, right, the issue that you have on a chart, right, the issue that you have overall is it's kind of anyone's guess. Right? I don't know why this is taking so long to load, right? It's kind of anyone's guess because what you've actually got is no way to really determine, right? No, kind of big enough institutional money to say, oh, I'm definitely making a 1, 2, 3, 4, 5, right? If this was a move that we expect to see, right? What we've had is, let's assume this is similar to Bitcoin, right? And let's just use, because we've just covered Bitcoin, right? The issue that I have for a chart like this is I'm going to look at this as a professional trader and say, how do I make money out of this? It might go up, it might go down. Well, there's other ways to make money. There's easier ways to make money, right? If I look at these levels and I say, okay, let's run some fib extensions on this. Let's go up and we start at those 0 level. We come up 0, 1. We come back down potentially for a 2. We've hit probably a 12, 6, 1, 8, right? Which means something in this chart, something in this rally is off, right? This is people jumping on a bandwagon. This is, almost like silliness, right? So therefore, what I determine this to be is anything above kind of this real region, right? I would deem this as overpriced, right? Anything above this kind of level, right? Massively overpriced, overvalued. So what do you expect to happen, right? Well, I've just calculated a 1-2 move, right? Look at exactly where the price falls to, coming back to the 2618, right? So for me, $12 is roughly the fair value I determine on there. However, we've got a nice block sitting in there, right? And if we were to extend that price out, center of that block somewhere, we're more likely to say that that's roughly the $11 value, right? So right now, we're sitting in this zone, and if this was fully institutionalized, which clearly is not, right, it's a pile of shit. And therefore, trying to trade this is a guessing game, right? It's a mugs game, right? You're playing a game, you're trying to play a game that there's no rules defined yet. There's nothing preset. There's nothing programmed for this type of move, right? Now, at this particular stage, right, what we're seeing is that we're under the value area, but the value area is only $11 or something, right? So you've got $1 worth of move. Taking a risk reward trade on something like this, right, would need to look like, if I went long on this right now, I'd be looking to come just below that level there, and I'd be taking a stop loss at this level there, right, a couple of pips below that. Where's the sense in that? Where's the logic in that? Right? Well, there isn't any. So in that sense, why would I even look at this trade? It's terrible. It's beyond awful, right? So in this particular point, I just avoid it. If this was institutionalized, right, and this was already kind of, pre-programmed, if I saw this on a chart, I'd say, well, just come back when it's actually doing something, right? And for me, the great example for something like this, people often ask me about different Forex pairs and so on. And although I tend to look at the majors, right, I hardly ever trade the majors, right? I trade Aussie dollar, right? I like GBP, JPY, and that's why these two are at the top of my list, right? Kiwi is obviously linked to Aussie, so these three, right? 4, 5. This is probably the order that I look at these charts, right? The only reason I look at Euro GBP is I pay myself in pound, and I'm living in France, which uses euro. right? So the reality is, if I look at something like Euro GBP, right, I'm going to look at this chart, and this is fully institutionalized, and I'm going to say it's pig ugly, right? There's nothing in this chart that I like, right? And if it wasn't for the fact that I was living in France and technically working out of the UK, right, I wouldn't probably have this on my chart. I wouldn't even look at this as a pair, right? It's horrible. If we look back, I can go back to 2016, right? And I know 2016 because I was here. If I look back at 2016 to now, what have we done? Well, on a bigger scale, we've done exactly the same as chain, right? As the chain link chart we just looked at. We've gone pretty much sideways, right? Is there an opportunity to make money in there? Well, of course, if you want to come in and determine the ins and outs and the little swings, be my guest. Am I interested? No, not at all. It's pathetic. It's crap. It's terrible. I wouldn't look at that if you paid me, right? It's awful. So the reality is, right, we've had this moment, I'm going back to 2008, 2009, and we've literally had one dip back almost to parity, right? So for me, I'm looking at this, and just like I've covered with the chain link chart just now, there's probably a fair value at around 85. Yeah, I'd probably say 85 to 88 cents, right, or pence per euro, right? And I would say roughly we're there. We'd be there or thereabouts. If I was to take a trade on this right now, which way would I go? No idea. I'd be guessing, right? Because there's nothing there to determine the fact that we're on the way up. So answering the two questions is, I'm looking for the nested moves. I'm looking for the confirmation. When I showed yesterday the Aussie dollar play, right, this is what I'm seeing, right? And I know it's hard sometimes just reading it as a text, but this is what I'm seeing, right, in terms of an Aussie dollar move. Right, let me just let this load up. In this Aussie dollar move, right, we've clearly hit a low, taken out a prior low, right? So for me, the way that I'm seeing this right now is this move down and a move back up hasn't technically changed the character, right? But it has come back to the zone, right? So although it's not textbook, it's close enough, right? And we're talking about this is a weekly / monthly move. I'm going back, 2020, right? So this is kind of close enough for me to say, hey, there's something interesting going on here. We've now come back and potentially we've seen from this 1 down to a 2. We've seen maybe, right, a large scale we could probably find a 5 move inside this, right? So you want basically a 5-3-5. Now, if I then come down and say, oh, we've hit this 5 at the low, I can see one swing inside, followed by the B, followed by the C, right? So to me, both of these moves inside the 1 work. Now I'm looking for a 5 move. Well, that works. So all of a sudden, I'm thinking to myself, wow, that's not a bad, that's not a bad view of this particular chart, right? Now, when I'm looking at this next, I'm going to say to myself, well, okay, let's look at the extension. If I come down 1, 2, 3, and 4, well, yeah, it kind of works, right? This is why I've got these 2 yellows, right? This is the 1, 2, 3, 6, the 1, 2, 7, 2, and the 1, 3, right? So all of a sudden, we've got a cluster, right? Where does that cluster happen? Well, just in that region there, right? We've got an imbalance on the way down. We've got a stop and go candle. And when I say stop and go, I'm saying we were rallying. We kind of stopped rallying. We come back and tested and we gone. Which means at this particular point, right, there's interest from an auction perspective to go up or down, right? So the fact that the price kind of comes back to this region makes a lot of sense, right? And therefore, I'm looking at this move and saying, well, I can find a nested move inside that works with my fib extensions. I can find a move, right? And watch this now. If I pull this move on and I come back to a retracement level, put this level in, 0 up to the 1. Well, what have we done? We've literally just come under that 618, So for me, there's two confirmations that that's kind of nice. Right? We then get this massive rally away, and I'm talking again, this is, monthly now to weekly. Right? This is where I'm talking about the nested move. Right? So larger scale, I'm 0, I'm 1, and I'm assuming right now this is my 2. Right? Might be completely wrong, and we can create a completely new 2. If that's the case, I just look at the chart and say, okay, I'll come back to this at a later point. Right? If we come under this level, right, my whole setup changes. Right? If we don't come under this level, I'm looking for areas of interest at these kinds of levels. The nested move, right, is we can see inside, if I drop down to a daily or a 12-hour, 0, 1, back down 2, extension 3, pull back 4, move up 5, right? I'm seeing pretty similar to this move down we had in the 1, 2, 3, 4, 5. I'm seeing potentially, a 5 move down, an ABC back, followed by a 5 move down, right? So again, if I zoomed in from the nested one down to the swing A, I'm going to see technically a 5, right? I might see a 3, 3, 5, right? But both of them, both scenarios are going to give me some kind of clue, right? Some kind of hint. Now what I want to do, I'm going to stick that extension on. I'm going to say to myself, down to the A, pull back to the B, the high is up there, right? Look at where that is, right? We've gone sideways along the 618, 0618, and we could potentially be traveling back to that kind of one region, right? This is the 100% of that move. So I'm keen on this move, right? Because I got the stochastic in my favor. I can count the 5. I can count the pullback. I can count the 5. I can count the pullback. I can see the character changing right now. We've gone from moving down aggressively like this, like this, like this, like this, to now going kind of sideways, right? This is the change of character. This is the change of attitude of that character, right? It's literally running out of downward steam, right? So what I want to look at then is if I come in and say, okay, let's look at the stochastics on these levels. Well, where are we? Weekly time frame. Oh, well, guess what? We're already oversold. If I look now on, let's say, the smaller time frame, let's say the daily, right? We're in this position where this is going to give me some kind of clue as to we're ready. Well, we're not ready yet because we got a false bar on the daily, right? What's happened on the daily? We've stopped going down and we've started going sideways, right? Am I ready to take this long? No, definitely not yet, right? This is where now your Wyckoff kind of comes in, and this is going to start looking for a schematic to take this long. Now I want to zoom out to the higher time frames. I'm going to say we're on a higher time frame. Hey, guess what? We've run out of steam. Right, let me see if I can click this big. Right. On this higher time frame, we've run out of steam. As the price is dropping, so is the volume. We're already in the oversold area. What would I expect to happen? Well, I want a big rally. This rally I'm talking about, right? The rally from here is this is the 23rd of October this year, right? This is now, right? And we're in that oversold. The overbought peak was July 2020, right? I'm talking about a move that could last me 3 years. That's the kind of trade that makes me money. That's the kind of trade that I have zero stress in. That's the kind of trade that's easy to scale into, right? And this is where the combination of the picking the right instrument, being able to almost back test with the validation on a bigger scale, right? When I'm looking at the Elliott moves, I'm not looking to say, oh, well, I think this is going to go from A to B and I think I'm going to trade the next hour down. I'm looking about, right, a trade that once we start making highs, right, once we start breaking the trend from here, this can be a small time. I can jump onto a 12-hour time frame now, 4-hour time frame. Once we start making character changes, right, my first target is 78, right? That's 1,500 pips. 1,500 pips, even at $20 a pip, it's easy money, right? $50 a pip, $100 a pip, easy money, right? The reality is, instead of saying, oh, I'm going to go and take this and I'm going to guess which way I'm going, left and right, I'm waiting for confirmation to know that what I've already assessed is that I was right. I am right. I want to be right, right? And the more that I want to be right, the more information that I need. The more information I need, the more institutionalized the playbook, right? The issue that we've had, and I know for you guys who've been with us for a lot longer, maybe you guys right from the start or from the first, 6, 8, 12 months, you guys know that what I've said about the kind of COVID drop, right? What used to happen, and this is where it's become an awful lot harder over the last 2 to 3 years, right? What tended to happen, right, was you had things like Aussie dollar doing this, right? You had New Zealand dollar, basically doing this. You might have had Euro USD doing this. Right? We would have seen maybe GBP JPY doing this, right? We would have seen Euro JPY doing this, right? The reality is, a lot of these moves, right, were completely independent of each other. What happened in March, right, of the COVID kind of lockdowns and the COVID spikes, is that all of these hit an extreme low or an extreme high, right? Which meant everything that was going from the low is now starting its new rise. Everything that went from that high is starting its new low, right? So it's kind of seeking the inverse liquidity, right? Now, that ultimately is what you're going to be looking for in the grand scheme of things, right? So for me, when I'm looking at these charts and I'm saying, well, I can see what happened, I'm talking 3 years, you know, before. Now we are setting up for moves that are likely to last for 3 years, to that upside, right? So the issue that you have when you start looking and you start trying to figure out, what's going on, why, where, how, right? Something like this, you can assess with confidence, right? Something like Chainlink, I'm going, I still don't know, right? And then you can say, oh, well, let's apply Wyckoff. Well, that's not going to work because there's not enough sentiment to wrap Wyckoff schematics into the playbook, right? Well, let's look at Elliott. There's not enough people there, right? The reality is what institutional money does. And okay, let's try to think of this a different way. I used to go down to Malaga, right? Southern Spain. I was going to Malaga for the weekend, right? And one of my friends, he worked in a place, Panasonic, in a big factory. We used to go down and do the kind of the booze trip, right? We used to go down and get absolutely slammed over the weekend, right? And we'd come back with 15 bottles of whiskey. We'd come back with maybe 600 to 800 cigarettes. And Monday morning, he'd take them into Panasonic and sell them. Right? So we'd make an absolute fortune over the weekend for this kind of booze trip, right? As well as having all the fun to go with it. What we tend to see is places like Malaga, right, attracted criminals from the UK. It attracted a crowd that had money, right? These were, older guys retiring. These were, kind of mafia type people retiring. And the reality is, it became the kind of the hub within Europe for the place to go, right? It was kind of the tax haven. It was lots of benefits. The sun was shining. What then happened was all these kind of young, pretty women kind of went there because they were looking for, kind of sugar daddies. They were looking for that thing. The reality is then the next step meant that younger guys were saying, oh, there's loads of attracted women down in Malaga, let's go. Then all of a sudden it becomes kind of almost a shit show because now you've got this combo of these older guys with super yachts and living the lifestyle. You've got these kind of young women chasing that lifestyle, right? And then ultimately you've got these young guys kind of going there, kind of almost camping for the weekend, trying to chase these kind of young women. And it becomes the cycle, right? The reality is, if you can use this type of analogy, right? And I know it's not the best of analogies, right? But it's something in my mind that really makes sense when you're looking at something like Chainlink, right, or other shit coins, right? You basically have the equivalent of the money men, right? The money men are your founders, the money men are your VCs, your money men are the guys that might invest a few million, right? You then have the kind of the crowd chasing that kind of move, right? Oh, it's, we've seen this as an event. We see the seeing this as a, some kind of event, right, is no different than your 20-year-old blonde girl that everybody's chasing, right? The reality is this is kind of then it becomes the stereotype, right? And this is why I think the example works for me in terms of trying to break it down, right? What then happens is you get the crowds, you get people who have no clue, right? They've basically listened to the postman, they've listened to their friend in the pub, and what they've then gone and done is they've gone, well, actually, I'm going to buy some of this shit, without realizing, yeah, it is actually shit. The guys with the money, they're still in the control, right? They can do away with, they can change the blonde, right? They've got the ability to manipulate that market, right? And I've seen this time and time again, right? Like I said to you, I got a good friend out in Dubai. Him and his brother, our brother-in-law, they set up basically an exchange, and they were working with two or three big investors. As the investors would plow the money in, it would give them the liquidity, and they would walk away with, I mean, millions over the space of 3 or 4 days, right? And this was kind of the way that it works, right? This is what's going on with, companies like FTX. This is what's going on, probably even with Binance, right? Every time a big move happens, Binance closes down, entries and exits, right? The reality is there's a lot of manipulation in these markets, especially in the crypto market, without it being regulated. If you're trying to make money on a consistent basis, right? Don't go to Malaga, right? Don't go play roulette, right? The reality is pick a different game that you know that you can win. Pick a different destination you know that won't be manipulated. And this is where you'll have the advantage. If you're going to start looking at things like your gold or SPX, right? Although, yeah, of course, you've got market makers, you've got Composite Man, and so on. So the real problem for someone like Composite Man and market makers in general is the market's almost too big, right? And therefore, to manipulate the market, it can still be done, right? But it takes an awful lot of doing. If you've got 100 big players and only 3 or 4 of them want to move that market, they're going to have an awful big struggle playing against 97 also big players. When you look at what's happening with the institutional play and the transition of Bitcoin, you can kind of see it happening, right? So when I go back, and I'm just going to finish off with this, I know this one's a longer stream, right? But it was really important to kind of tie these couple of things together, right? When you look back at what happened with Bitcoin, right? The real obvious plays, right, was when you could adjust and see 0, 1, right? Everything kind of prior to this move for me was not really valid, right? It was kind of the little minnows playing in a pond, right? Before any of the bigger fish come in, right? At this particular point, right, this is where the kind of the sharks entered, right? This is where the big players started to really make some sense of what was going on, right? This probably from this move down was these guys manipulating that move, right, to get in decent entry to rally this up. Right? When you run your fib extensions from a 0, 1, right, back down 2, right, or something like this, or I think this was actually the 2 followed by the nested move inside, right? When you see that nested move inside, if this was technically the new 1, the new 2 inside, right? So this is the bigger scale one, right? You then have that move. I'm not sure which one was which. So yeah, this was the 2, right? So this was the bigger scale 2, right? What you then have is that from there, as this rally kind of comes up 3, 4, 5, right? So this is now the 5 wave move, which technically put it on a 3, right? If this then is the larger scale 4, forget the bracket, sorry, something like this, right? You could then rally up for a 5, right? Now, what people fail to see is that you could account for the reaccumulation. You could see the distribution. You knew liquidity was coming back. You had this pig ugly move 1, 2. Then you had almost the perfect fib extension levels here, 3, 4, 5, right? All of a sudden, these 3, 4, 5, 3 to 4 to 5, right, gives the clues as to why we're going to come back to the liquidity zone, into that 40k region, 40k region for me, look, is smack bang central. So when I said, hey, we're going to go 65k, and I was talking in August, we're going to go to 65k and drop to 40. 40 is the zone, right? Now that's not a lucky guess. That's knowing that the liquidity sits there. We've come underneath that area, right? And now, if we assume that so far we've been right, so far this is right, so far we've done all the kind of guesswork. Where we are right now, right, is potential for a larger scale too. This is a larger scale two, and I'm talking a big, big two, right? Because obviously that move there in size 5, right, equals a much, much, much bigger one, right? So therefore, coming down, we could have an AB followed by a C, but this doesn't look impulsive to me. So the reality is I'm seeing this potentially as the A, the low, followed by a pullback move B, followed by another move sideways C, which would equal the 2. Then I want to see some impulsive moves. Monthly stochastic already overbought, already dropping down, right? So nothing's kind of going anywhere anytime soon, right? This is what obviously these moves look like. All right. So I'm going to leave it like that, right? Obviously, I know this one's longer. This one's going to be blabbering on, but I thought it was really important. I think given the two questions from yesterday / last night and this morning, I wanted to merge the two kind of questions and answers because I think they were appropriate and how they kind of fit together. So, don't take it as me being negative or me giving negative feedback on kind of shit coins. But from my point of view, guys, if you've come in to learn to trade professionally, you kind of need to start with professional instruments. You can't apply professional techniques to a shit chart and expect good results, right? In certain cases it'll work, and in other cases it won't. So you can't be disheartened when it doesn't work because I've applied this and I've looked at the master pattern and I found my Elliott move, but it didn't play out. Well, yeah, because you're not expecting it to play out, and you shouldn't expect it to play out, right? So at that particular point, I'm going to finish. I'm going to upload this now straight away, and I'll get this out to the subscribers only, and I'll see you obviously on the next stream. So thanks for watching, guys. Cheers.